As we move into the new year, many of us are probably planning exciting new goals such as saving for a house, starting how to invest, etc., etc. But here's the question: have you thought about how you're going to protect everything you're working so hard to achieve? Financial protection is often overlooked, but is pretty crucial, especially when it comes to protecting you against unexpected events. To help me delve into financial protection and how you guys can protect yourself financially in 2025, I am joined with Ayo Noble, a financial protection advisor. Hello, Ayo. How are you?
I'm good, thanks. How are you?
I'm good. Welcome onto the podcast.
Thank you for having me.
Very excited to chat all things financial protection. However, like I said to you before we started filming, I feel like people feel like this is a very boring topic, but very important nonetheless.
Absolutely. I mean, I think it's the one thing that everyone needs because it's applicable to everyone regardless of your level of wealth.
No, exactly that. So I guess before we delve into all things financial protection, please introduce yourself to everyone listening or watching.
Well, my name's Ayo Noble. I'm a financial protection advisor. I'm a married man, and I'm a pretty straight talking individual that, you know, likes things when it comes to money, family, and just being smart.
Yeah, no, I love that. And what inspired you to become a financial protection advisor and also start sharing content online?
Oh, okay. I mean, if you watch my content, you probably know the story, but I'm sure your viewers, for them, it was what created it was the fact that I lost my dad when I was 16, right before my final exams. He didn't have any financial protection, life insurance, or anything like that. Obviously, at 16, I don't know any better.
Yeah.
Now, I don't know if he knew, and typically, like most people, I'll do that at a later point when I get older or whatever.
Yeah.
But unfortunately, that day never came. What I do know is the impact of not having it. So I'm the oldest of three. Obviously, as you can imagine, my mum became the sole breadwinner, and, you know, at the same time had to find the expenses needed to cover his funeral. So I saw the financial toll that took. Fast forward about 7-8 years, I finished uni. I was working in recruitment, and I had a colleague come in. It was like around this kind of time, like November, and he was like 21 years old. He didn't have any financial he didn't have any financial responsibilities.
Yeah.
He also didn't have any kids or a girlfriend or anything. This was his first job.
Yeah.
Now, 6 months into working, he'd only been there for 6 months. He comes in with lots of excitement, pep in his step. Bearing in mind, he's the kind of person that keeps himself to himself.
Yeah.
So it was very abnormal behavior. So I was like, you know, what's going on? And he was like, oh, Ayo, you won't believe it. I'm buying a new property. So I just thought, bank of mum and dad, innit? Obviously, like, there must be how you're doing that because you've only been there 6 months and we don't make a lot. He was like, no, it's not bank of mum and dad. I then thought he must be buying in the north of England where it's cheap. Do you know what I mean? You got to start somewhere.
Yeah, 100%.
Right? So he was like, no. And I said, okay, where are you buying? He says, I'm buying in Tunbridge Wells. It's a 3-bed detached property. It's got a driveway that holds 2 cars and a garage.
Must be nice.
And I was like, a 3-bed for yourself? He's like, yeah, just me. And I said, okay, it don't make sense. How much does it cost? Maybe there's an extenuating circumstance. He's like, no, 350 grand. Like, and it's me. And I'm like, how? He's like, okay, I'll tell you what happened. My granddad passed away 2 weeks ago, and he had $500,000 worth of life insurance as well as stocks and shares. The money has been paid out to my mum and dad already, tax-free, and they've decided, instead of them waiting to pass away before I get my inheritance, they're going to give me my inheritance now. That way I've got a leg up over my peers. In other words, I've got a leg up over you.
Yeah.
I said, okay. So then it dawned on me that, okay, my dad essentially was dying for free, whereas his granddad wasn't. And the only thing that separated the two was a direct debit. That's when I realized that, okay, life insurance is something that everyone should have. And, you know, it's the difference between being on GoFundMe, having family divisions, as well as, you know, setting up the future generations to have a nice financial advantage. So I said, okay, given the fact that now I know that, why isn't anyone explaining this? Why is it that only 30% of the population knows this? So I said, okay, it must be one or two things. People don't know, or the way it's communicated to them, it's not digestible.
Yeah.
So I just said, okay, cool. Like, I got to be the guy to make it make sense for people. So that's why, you know, I have the phrase or coined the phrase, don't die for free.
Yeah.
Because essentially that's what you're doing when you don't have life insurance.
Yeah. No, it's so true. And you know what? Earlier this year, I actually shared my story of my dad passing away when I was 16 as well, and I was in the exact same position as yourself. The oldest sibling, mum became the breadwinner, no life insurance policy. I don't think I even knew what it was even then, but I just knew our financial situation changed very quickly. Now, I'm not going to say it was riches to rags, but I knew how tough it was on my mum, and I know now the importance of financial protection in all its forms now. So this is why I think it's really important that we have this conversation today. So thank you very much for sharing your story. But I kind of want my listeners to get to know you a little bit better before we start delving into the ins and outs of all of the financial protection policies out there. So my very first question for you is, what's the most expensive item you've ever splurged on?
See, when you say item, it's a bit hard. What I like to spend my money on is experiences.
Okay.
So I like to travel.
Yep.
So just recently, I think I'll say the most expensive trip, believe it or not, even though I've been to more expensive places, I'd say Italy.
Really?
Yeah, so I went with my wife to Milan for
Yeah.
her birthday.
Very nice.
Now, Milan's not really that kind of place yet. Like you should do that if you're not really ready to spend.
And you took your wife, and it was her birthday.
And you take your wife, and it's her birthday. Like, so just for your viewers out there, if they're thinking about it, be ready to spend if you're going to do that.
Yeah. No, I'm here for it. I love spending money on experience as well, and definitely travel, as I like to talk about on the podcast all the time. And I guess my second question to you is, what's the best financial decision you've made in the last year?
Increasing the amount that I invest.
Okay, I like that.
Yeah, so I've been investing before last year, but
Yeah.
just increasing it, I'd say, is probably the best financial decision. Reason why I would say that is because there's only so much you can do to, like, how do I put it? Finances are, it's like football to me, because I'm a big football fan.
Yeah.
Attacking and defending. Defending is all the saving and the cutting back and all of that,
Yeah.
but there's only so much you can defend for.
Yeah.
And the only way to win games is literally to attack and attack better than the opposition. So I think it's more important to increase the amount of money that you make and generate and can create than it is to cut back, because there's only so far you can cut back. But
Yep.
there's an infinite amount of money you can make.
100%. And I like that because I feel like people often overlook how much an increase of like 10 or 20 or £100 can make. So I actually did the same. I actually upped my pension contribution by, well, it was 50 and I've upped it by 100, because I'm just like, future me will genuinely thank myself for it. Might be a little bit painful now, but I know future me will love me for it.
Absolutely. They will.
Yeah.
Or you will.
Yeah, I definitely will, hopefully. So I obviously have you on the podcast today to talk about financial protection. And funnily enough, we spoke about financial protection a few years ago with another advisor, and I literally felt like it was yesterday they spoke about it, but it actually ended up being 2021. So it's about time that we update the information, share the importance of financial protection. So I guess my first question for you is, what is financial protection?
Financial protection, in a nutshell, is you essentially protecting the biggest assets that you have. Financial protection comes in the various forms. Life insurance, that's protection for your family when you pass away.
Yeah.
You have income protection, which pretty self-explanatory, right?
Yeah.
Protecting your income. And then you have critical illness cover, which is closer to protecting your health.
Yep.
And then you have, for the people that it applies to, mortgage protection.
Yeah.
So, of course, obviously, if you have a mortgage, you'd want to protect that. You'd want to mitigate against any unforeseen circumstances that could lead to foreclosure.
Yeah.
And then obviously you have stuff like private medical insurance. That's for people that essentially don't want to rely on the NHS and want to have a better medical experience.
Yeah, no, I love that. And obviously you preach about financial protection quite a lot. Why do you think it's so important that people actually take out one of these policies?
It's a different reason for each person, but starting with life insurance, first thing I would say is, why would you want to die for free? It's literally that simple. Life insurance is literally, to me, how I view it. This is you taking advantage of an inevitable situation and enabling your family to capitalize on it.
Yeah.
What do I mean by that? If everyone watching was to ask themselves, okay, how many of my grandparents passed away before the age of 90? And let's say, whatever that number is, let's say all of those people had $500,000 worth of life insurance. That means that you would probably have 1.5 million as a family in your lifetime, tax-free, for you to do whatever you want. Now, you think about the impact of like anywhere from $500,000 to 2 million would make in your day-to-day life right now.
A lot.
Do you know what I mean? And like, as we all say, death and taxes are guaranteed. So why not make the most of it? And the other side of it is that there's always going to be a cost to that passing. The question is, who pays it? Do you want it to be the provider, or do you want it to be your family?
Yeah.
So that's why that's important. The other side of that is, it's a great way to mitigate against inheritance tax. Believe it or not, the wealthiest people in the world have life insurance.
Of course, doesn't surprise me.
Because it's just an easy way to mitigate against inheritance tax. Because it's like, right, I'm going to leave X amount of money, whether it's through property, whether it's through, businesses or actual cash. The government's probably going to want to take 40% of that. Do you know what? That 40% debt or bill that they're going to ask for, why don't I make sure that it comes out through a life insurance policy?
Yeah.
Meaning that I'm paying a little premium to guarantee a larger amount of money to pay that.
Yeah.
So you have that reason. And then on top, even if you look at it, it's just, as a parent, I'm sure every parent desires to leave an inheritance for their kids. This is the easiest way. You don't need to set up a business. You don't need to graft for 20 years to do it. You can leave millions of pounds in the space of an hour, 45 minutes to an hour. So there's that. Then you have income protection. 95% of the population, give or take, are employed.
Yeah.
Meaning that their sole way of generating an income to cover their lifestyle is through employment. Now, if anything happened to them and they can't work, what happens to your lifestyle? So,
In trouble.
do you know what I mean? That is something that everyone needs. Whether you're self-employed, employed, a business owner, an investor, everyone needs that.
Yeah.
Then you've got critical illness cover, like that form of protection. How many times have we seen, marathons for cancer, and how many times have we heard of someone have a heart attack or a stroke? All those situations and many more, they're all eligible for a payout. So like I know someone personally, it's even a colleague of mine, his dad had a heart attack and he had critical illness cover and it paid out.
Yeah, wow.
He survived it. He didn't have to die. He didn't. Nothing bad had to happen, or it didn't need to be critical or fatal. It just needed to happen.
Yeah.
And there's a lot of people that I know that they say either their parents or grandparents had a stroke, and it's like that's something that if you had critical illness cover would have
Protected you for.
literally.
Yeah.
So it's very necessary.
Yeah. Oh, and you said many examples there as to how these insurance policies pay out, but there's probably a couple of people listening at home right now thinking it's too good to be true. Why would an insurance policy pay me £1 million when I've died, or why would an insurance policy pay me when I've broken a leg and can't work? So would you mind explaining how these policies actually work and why it's in the insurance provider's best interest as well as the person taking out the policy?
See, that's a good question. I mean, I've got quite a few statistics on that.
Yeah, please hit me.
Which I'll be happy to share. But just to answer the question, you got to see it as they're not a bank. They're beyond the bank. So when the 2008 2009 crash happened, it was insurance companies that were bailing out banks. Does that make sense? So you got to think about that. Banks print money. If you've got a money printer and I don't, and yet you, if the money printer needs me to give you money, how much money must I have?
A lot.
Do you see what I'm saying? So they don't have a problem paying out. And bear in mind, as they're accumulating all this income from the various policyholders, they are investing that. They're not just sitting and counting it and looking at it. They're doing other things with it to generate a return on it so that if the time comes, they're happy to pay. Now, the other side is, I always say to people, no one wishes you well more than two people: thieves and insurance companies. Thieves want you to prosper so they can rob from you.
Yeah. Insurance
Insurance companies want you to live long and live as healthy as possible so they don't pay you out. However, they're not against paying you out. Now, why do I say that? Because one, they're in business to continue.
Yeah.
I mean, if they gain a reputation of not paying out, they're going to end up going out of business.
Yeah.
So obviously they wouldn't want that. But believe it or not, here's some stats from last year. Aviva paid out 1.18 billion. 1.18 billion in claims with a 97.8% rate.
Okay.
Meaning out of every 100 people that claimed, Aviva basically paid almost 98.
Wow. Okay, that's a lot of people.
That was over 50,600 claims. And then in the last 5 years, they've paid out 5.3 billion.
Wow.
700, and then in terms of last year's one, 761 million in life insurance. Now just have a think about that. 61 million, is now liquid money in the market amongst your colleagues, friends, people that you know, and they're not saying anything.
Yeah, I was going to say, they're keeping hush.
761 million. That's what's been paid out.
That's a lot.
Do you get it? That's just life insurance. For critical illness, 362 million.
Wow.
And then for income protection, 53 million. And then 58% of that is because of cancer, and 74% of the recipients of that are women.
Wow.
So women are getting their stuff done. Now, more needs to be done because only 30% of the population has it. But from those statistics, you can see it. And then on top, as we said at the start, the second and third reasons for those payouts were essentially heart attack and a stroke.
Yeah.
So they're happy to pay. That's just the Viva now. Bear in mind, they're just one provider.
Yeah, and there's quite...
Legal in general, last year paid out £2.5 million per day.
A day?
Per day. This money is there, you know. Like,
So what's in it for them then?
well, see it as this. Let's say you said to me, Ola, Ayo, you give me £100 every month. Yeah. If anything happens to your watch, I'll give you a brand new watch. No questions asked.
Yeah.
Now you're saying that, let's say there's 100 of us giving you £100 for that. What is the likelihood of all 100 of our watches breaking at the same time on the same day?
Not many.
Do you get it? Now, you've just from the first payment, you've made enough to pay for a couple of watches anyway.
Yeah.
However, you're not just, again, sitting on that money. That money, you're now, let's say you're finding a way to generate 10, 20, 30% interest on that money.
Yeah.
So the interest you're even making on the money that we're constantly paying is enough to pay for our stuff. And yet we're doing everything in our power for our stuff not to break.
So true. Yeah.
Do you get what I mean? It's not like we're just going out of our way trying to break our watch just to get a new one. Like, we're not doing that.
Yeah. I mean, some are, but we're not.
So do you see, when you start to accumulate that and you start doing things like, right, you have tens of thousands, hundreds of thousands of people paying anywhere from £5 to thousands of pounds on a monthly basis, and you're putting that money into things like commercial property, bonds, real estate. You're buying other businesses. Like, your money is just making more money. It's not going to be an issue.
Yeah, no, I agree. And it's funny because I am the proud owner now of life insurance policy and an income protection policy. One day private health insurance will come, but I need to get my bag up. But I was actually pleasantly surprised as to how reasonable it was. So I think I pay around £48 per month for both policies. Now, I know a lot of people that pay double that for an iPhone 16, right? So how much is it like life insurance, critical illness protection costing people these days? Because I feel like a lot of people often assume it's very expensive.
See, that question is like asking how long's a piece of string.
Okay.
I'll give you a reason why. There are so many variables in it that there's no off-the-shelf price. Okay. So how it typically works, the more of a payout you want, the more it's going to cost.
Okay.
Then that's now on top of another variable, which is the older you are, the more it's going to cost.
Yeah.
Then you have another variable of what's the status of your health.
Yeah.
Then, so do you see, it's hard to say, okay, what's it good? Well, it depends on how much you want. Do you want £1 million covered? Do you want just 100 grand? Do you want 50 grand? Do you want 20 grand? Do you want, so what I always tell my clients is, let's tailor it to your budget.
Okay.
So in terms of the question, anything that you want to spend, what I'm going to do is find you the best policy for what you want to spend.
Okay.
So that's why I say there's no excuse. Everyone should have it. If you know that for you, look, and I always say to people, what's comfortable, not affordable, comfortable.
Yes.
Because you don't want to be paying this, then cancel it.
Yeah.
Because you're not getting your money back. So you want it to be something that's comfortable, something that's like, like when you ask me, this money that I'm spending every month is for this protection, that's fine. That, to me, that sounds like value for money.
Yeah.
So that's why I always say to someone, what's a comfortable amount for you every month? And then we go from there.
Yeah.
Now, of course, if you want all the protection and they want to be like you, obviously, then you got to spend more.
Yeah.
But if you're still thinking, I don't know, start with what you can, because it's better to have something than nothing. Because we always say, protection is something that you want to have and not need than to need and not have.
100%. And hindsight is always a beautiful thing. Like, I can't think of anything worse now as a business owner. I don't know, God forbid, suffering a long-term illness and now I've got no money. Like, I'm in big trouble.
You ain't got sick pay, so you're in big trouble.
Exactly. But obviously, like you said, one of the factors of the cost of protection is age. So what are the benefits of taking it out when you're younger compared to when you're older? Just because a lot of my audience around 18 to 35.
That is the perfect age. The closer you are to 18, the cheaper it's going to be.
Okay.
I'll give an example. I have a client right now. He's about 22.
Yep.
He spends about £30 a month.
Okay.
So he's got a policy that covers him all the way to the age of 90.
Wow.
That's another thing. There's a lot of people that their policy ends at retirement. Who wants to die at retirement? So it covers him all the way to 90.
Okay.
If he dies between any age between now and 90, his family gets a payout of around 700 grand.
Okay.
That's just because of his age.
Yeah.
I've also had another client that's 75 that says, I want 400 grand cover. Now you're thinking, okay, 400 grand is less than 700. Should be cheaper. Wrong. She's having to pay £740 a month
£740 a month.
if she wants 400 grand cover because she's 75.
Well, that's a big jump. Wow.
£740 for 400 grand is still a bargain. But when you're looking at it thinking, if I had done this earlier,
Yeah.
I'd have been paying 30. That's why it's critical that you start early. Because what happens is the 22-year-old, when he reaches 75, he's still going to be paying £30.
Okay.
So you see how you're talking about your pension, that your older self's going to be grateful to your younger self.
Yep.
It's exactly the same with
Okay.
protection.
Yeah.
Your older self's going to be grateful because the older you are, to them, remember, they're working on risk. You're older, so it means inevitably you're closer to death.
Yeah.
So they've got to charge you more.
Yeah.
Otherwise, it's just not good business.
Yeah. That makes sense. Wow, that's a huge jump though, because best believe I'm not paying £700 a month when I'm 70. I want to be on a beach somewhere just chilling. Do you know what I mean?
Do you see what I mean?
But I guess obviously when it comes to these policies, then if anyone wants to take out a financial protection policy, where do they go to get one?
So there's two things they could do. They could do it themselves,
Mm-hmm.
go direct to the provider. However, with that way, you're going to have to go to each provider to be able to compare to figure out who's the best, or
Yeah.
you're just going to have to do it with your eyes closed and hope that
Yeah.
they're the best.
Yeah.
9 out of 10 times they're not going to be the best. Or you can come to an advisor like myself, and instead of doing it 20 times, you just need to do it the once. And how I do it with my clients, I do it on Zoom so that they can see all the policies available, all the providers, so they can see with their own eyes
Yeah.
who's actually the best. Because what people don't realize is every provider will give you a quote,
Yeah.
but they're in competition with each other. So just today, I had a client, and he wanted to spend £15, and I showed him all the quotes. Now, some of the companies that he recognized more, they were going to give him 100 grand for the £15.
Yep.
Whereas the one that I recommended is going to give him 239 grand for the same £15.
£15.
£15.
15.
1.5. Like, it's like I say, it's up to the person.
Yeah.
Like, do what you can afford, but just make sure it's done. Because now he doesn't have to, like, if you ask him what happens when you pass away, well, my family's set. That's the answer.
Yeah.
He doesn't have to, it's not going to be a morbid conversation, nor is it going to be a conversation you need to have ever again. So
Yeah.
that's the two ways. I would recommend that you go through an advisor because, one, they're going to be able to advise you accordingly and be like, right, based on what you said that you have, your assets, this and that, you need this. At the same time, it's going to be more time efficient for you because now you don't have to be inputting your name, your age, your date of birth, your this, that, over and over and over and over again.
Yeah. And I guess obviously as we look into 2025 and let's say people listen to this podcast episode and they want to take out a protection policy, what do you think is the most important in order? And also how do people assess their areas of vulnerability when it comes to their finances?
Good question. I'll say in terms of order, start with life insurance because that's like, as much as you want to protect every other thing, the one thing that's guaranteed is that you're going to die.
It's so sad, but it's so true.
Now, we're not saying you're going to die young. We're saying you're going to die.
Yeah.
And the longer you leave it, the more expensive it becomes to mitigate for that eventual circumstance because you then end up like the woman that's having to pay £740 a month.
Yeah.
So you're better off dealing with it early, locking in your cheaper rate,
Yeah.
and it's done. After that, I'll then say your income because without an income, you can't function in this world, whether you like it or not.
So true.
So life insurance, income protection. You need to protect that because if anything happens to you whereby you can't work, you can't draw an income, then what's going to happen? Are you going to be able to live off the £493 the government's going to give you?
No.
Like that is the that is the statutory sick pay?
Yeah.
I don't even know if it's £493. It's probably £473 now at this point.
Yeah.
So, and everything's going up. So imagine the government's not increasing what they're giving, but everything else is going up. Who's got rent that's going to cover? None.
Yeah.
So you're going to be heavily dependent on your family. Now you're going to become a burden on them. There's only so much that friends can do.
Yeah.
So I'll say that. And then critical illness cover.
Okay.
1 in 2 people are going to get cancer. That's what the statistics say. We see every other day cancer research, people doing marathons to raise money for cancer. Because what I just think to myself is all those people that are now cancer patients and stuff like that, if they had critical illness cover, at least they would have had some sort of money to help
Their families. Yeah.
So now not only are they going through a very, very, very serious illness, but they're losing money in the process.
Yeah.
Because how long is their workplace going to pay them?
Yeah.
If they're saying they're going for treatment, how long is the treatment going to be? They don't know.
Yeah.
If that treatment is extensively long, like 6, 9, 12 months, which workplace is going to pay you for 12 months without being there?
Yeah. Yeah.
At best,
Many.
3 months, 6 months if you're in NHS, or NHS would do probably up to a year, but 6 months full pay, 6 months half pay. But even that, after 12 months,
Yeah. While she's still got mortgage payments, everything like that going out.
and the bank doesn't care.
Yeah. Yeah. It's actually really, really morbid, but like we say, it's so important, and that's the harsh reality of what's going on right now. Like we say it all the time, there's one too many GoFundMe pages going around at the moment for the cost of funerals and things like that. And like you said, yes, death is guaranteed, but we also don't know when it's going to come, right? So it's about preparing ourselves for the unexpected. But one thing you touched on is the workplace, right? Now, not sadly, but I guess I am self-employed, so I don't get, the benefits of like statutory sick pay. I don't get my employers paying for me. But am I right in thinking that some employers might actually provide like some sort of income protection as maybe like benefit in kind?
Yeah, they tend to mainly do life insurance more so. So on average, people have workplaces that one of the benefits is life insurance, but it would only be 4 times their salary.
Okay.
Now, I get a lot of people that sometimes say, oh, I don't need it because I've got it through my workplace. My first question is, that's great. Do you see yourself working there till 90? No. Okay. Cool. You don't see yourself working there till 90. Do you even see yourself working there till 70? Maybe. Okay, cool. Let's say maybe. After you work there till 70, what happens?
So true.
You haven't died yet, right? Now, guess what? You're 70 and don't have life insurance because you've relied on the workplace all this time. Now, guess what boat you fall into? The £740 a month boat, innit?
Wow.
Because now you need to get your own. Whereas what you should have done, get your own private policy from when you're young. That way, look, if God forbid something happens, the work payout is a bonus.
Okay. And can you get both payouts?
Yeah.
Can you?
Yeah, the work one is separate, your one is separate.
Wow.
So you might as well see it as, look, whatever work gives is a bonus, but I need to make sure my family is good. Because let's think about it. 4 times your salary.
Yeah.
That's essentially just 4 years. Is that really enough?
No.
There you go. Whereas with your own policy, you can determine how much I want my family to
Yeah.
get if something happens.
Yeah. Yeah.
The other thing as well, with workplace ones, right? Because you're not the one that's setting it up. You're not the one that's in control. I've seen it happen whereby someone's mum had a workplace one. They got stage 4 cancer, so they were out of the workplace for a very long time. But they thought, oh no, my mum's got, insurance through work, so it's all good. The workplace changed providers because obviously it's their business, right? They're going to do what's viable and beneficial to them. Now, the new provider had a stipulation that we won't pay out unless you've worked for a minimum of 12 months.
No.
How are you going to be working for 12 months when you've got stage 4 cancer and you're basically getting treatment? So at the point of death, because eventually she passed, there was nothing.
Wow.
And that's why I say what I say, because you're not in control of that. So you want to be in control of these things rather than be cheap, essentially, because that's what it really is. It's like, no, I don't want to get mine because they're paying for it. But you don't know who the provider is.
Yeah.
They can change any time. They can do whatever they want.
Yeah. Yeah. And I think being in control is so important. And that's why education is the most important thing, because as much as we say, we're dying for free, but no one teaches us these things, right? No one teaches us in school the importance. It's when we have to live that reality, we're like, gosh, if only, right? So obviously we're talking about being in control, and obviously one thing we're in control of is our assets. So we've obviously got, well, I don't, but some people might have a house, some people might have children. But for those that are listening that don't have children, don't have any assets, is it still important they still get some form of protection?
Absolutely, because the biggest asset is themselves.
Yeah.
And no matter how old you are, it's not free to be buried.
True.
Like, we've seen
They're
it.
expensive.
Do you know what I mean? There's no like, oh yeah, children are free. If you're under 16, then it's free. There's nothing like that. It's, hey, look, this is the price. We don't do Klarna. It's pay in full. Tell us how you want to do it. Are you gonna go into debt for that? Are you gonna go out of pocket for that? Savings? It's up to you. So, and again, the younger you are, the better it is for you.
Yeah.
And like, you've got family. Even if you don't have kids, you've got parents, siblings that if anything happened to you, God forbid, it would be them that would need to deal with it.
Yeah.
So, and if you're saying that you're young, then you definitely ain't leaving, you don't have 100 grand stashed in the bank unless you're the 1%, really an exceptional being or whatever.
Yeah.
For the majority of people, you're not going to have that kind of money stashed away.
Yeah.
So you're better off paying a small premium to then secure that, so you don't even have to think about it. It doesn't even have to be a conversation again.
Yeah, no, I agree. Like I said, you're preaching to the converted here, but hopefully you guys listening are genuinely taking on what Ayo's saying, because I think it's so important. I've definitely touched on it one too many times about how unpredictable death is and life now. Like, we're not in control of life, where that goes or whatever direction it ends up taking. But I guess as we look towards 2025, do you have any final top tips on how people can protect themselves financially?
Yeah, looking towards 2025, I mean, you the sooner you do it, the better, because the younger you'll be. Mm-hmm. But essentially, you just want to, what I always tell to people, is, here's a good rule of thumb. Anything from 1 to 5% of your gross income, put that towards protection.
Okay.
You pick the percentage between 1 and 5. Because when you look at it in the grand scheme of things, right, if in hindsight, right, like if someone said, hey, if you had paid £100 a month, your family would have got X amount, 6 to 8 figures. In that moment, how much does £100 sound like? It sounds like nothing, right?
Yeah.
In that moment.
Yeah.
And that's what it really is, like, because if you look at it, 1 to 5% to protect the remaining 95 to 99%, it's not that much of an ask, is it?
No, it's really not. Wow. Okay. I've even taken some food for thought. Even the fact that my actual life insurance policy, I think actually the term is until I'm 68. So that's maybe something I'm going to have to change.
We need to speak, because at 68, what happens? Do you really want to die at 68?
Well, no. That's what you've now made me think. And then I don't want to start paying £800 when I'm 68.
So you want to, put it together now to 90, so you don't have to think about it again. Or whole of life.
Okay. And what is the difference?
Whole of life is guaranteed, meaning you can live to 200. They're paying out. However, for that guarantee, it's more expensive.
Shock.
Right? So, whereas to 90, it's good odds. Only 22% of people in the UK live to 90. Life expectancy in the UK is 81.
Oh, wow.
So, and on average, when you look at the payout rates, the average payout is to someone that's 70.
Okay.
So even though life expectancy is 81, a lot of people don't even get to 81. Only 22% of people make it to 90.
Gosh.
So it's good odds. And because it's a term, it's cheaper.
Right. Okay.
Now, what I say is get a policy to 90. If you're still feeling very strong at 80, then at least we can start looking at stuff like funeral cover and stuff like that. Because at 80, sure.
Yeah. Okay, like I said, a lot of things that I need to think about, and also a lot of things you guys listening or watching need to think about as well. But Ayo, thank you so much for joining me on the podcast. I feel like this conversation is very much needed, especially because the last conversation we had on this was 2021, which is insane. But yeah, thank you so much. And I guess, like you mentioned, you are a financial protection advisor. So if anyone wanted to kind of seek your advice or follow you online, where can they go to do so?
Literally follow me on Instagram, TikTok, Ayo Noble _. Literally, once you go on my page, everything else that you need is there. You can contact me there. You can schedule your own consultation there, ask questions. And then, it's literally so straightforward. That's why I do everything with the client, so that they can see for themselves how easy it is. So that's what I would say. And don't die for free.
Yeah, no, thank you so much. And guys, I'll leave all of the links in the podcast description as always. And it's literally like what? It doesn't even take longer than half an hour to even set up a policy, does it? So
literally.
Yeah, guys, please consider it. And it's definitely not as expensive as you think it is. So thank you once again.
No problem. Thanks for having me.